clearly the market is rethinking the implications of a new Fed chair. I think the timing was a surprise because it all kind of came out last night. And I think it's very healthy, actually, for silver and gold to be seeing some profit taking, because that was a juggernaut trade that I think in many ways was like a vortex sucking risk appetite from everything else into those two trades.
The sharp reversal in gold and silver has grabbed attention precisely because of how powerful the prior move had been. These were not steady, measured advances. They were parabolic, momentum-driven trades that attracted trend followers, macro hedgers, and speculative capital all at once. In Lee's framing, gold and silver became a vortex, sucking risk appetite away from equities and other assets as investors crowded into a single, seemingly unstoppable theme. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
You call this an excellent choice of Mr. Warsh, your first pick. Why?
He's the most experienced. I think he did a great job during the financial crisis. He's gotten, as you know, praise across the board from central bankers, not only those on Wall Street. And you know, certainly he likes a lot of Trump's policy, but he's not going to be a lackey. He's not going to be a toady. I mean, you know, look at the dollar jump. I think it was a lot of international concern. Trump was going to put someone in and just going to lower interest rates. Well, that's not happening. I think he picked the most responsible, qualified man here. And I think that's a very positive for Wall Street and the dollar.
Wow, interesting commentary there, Professor Tom Lee. You agree with that? And what do you make of the very trades that I highlighted at the very top of this show? Because it's so dramatic. Silver's rollover today, as was the run-up that we've seen.
Yeah, well, I think it is a good choice for Fed chair, and the move in gold and silver today, it's an interruption. So clearly the market is rethinking the implications of a new Fed chair. I think the timing was a surprise because it all kind of came out last night. And I think it's very healthy, actually, for silver and gold to be seeing some profit taking, because that was a juggernaut trade that I think in many ways was like a vortex sucking risk appetite from everything else into those two trades.
You think those two trades are done? I mean, you talk almost as if you think this is merely a pause that might refresh. The velocity of the move out of silver today is somewhat startling to look at. The market's not supposed to act that way.
Yeah.
I don't care what happened back in 1980 or whatever. It's not supposed to do this.
That's right. You know, I think there is some fundamental reasons for silver to be rising, and gold is, of course, now should hold a place in someone's portfolio. But those were parabolic moves. I think you're right, that could look like blow-off tops similar to 79.80. We won't know with the fullness of time.
Okay, Professor, what do you make of those trades? We often talk so heavily about stocks, and we will. But these are the moves that have grabbed everyone's attention. Gold, silver, dollar, probably find a few other things too.
When you, I mean, I agree with Tom. When you have so many momentum players that join gold and silver, just playing that trend, this is exactly the type of reaction you get, you know, that parabolic move down, and then any little piece of news or little selling, and maybe just the confidence, hey, Warsh is not going to debase the currency, that's enough to trigger this sort of reaction. This could be the high for quite a while, but I still think that, you know, I agree that, you know, having a sliver of gold or some gold in your portfolio is probably still a good idea. I mean, it is a good counter-cyclical asset. It does diversify against risk assets.
Okay.
One of the most important developments Lee highlights is market broadening. For years, returns were dominated by a narrow cohort of mega-cap technology stocks. Now, performance is spreading across sectors: basic materials, industrials, healthcare, and small caps. This is not a late-cycle warning sign. Quite the opposite. Broadening participation typically characterizes mid-cycle expansions, when growth is healthy enough to support multiple areas of the economy rather than just a handful of dominant names.
So, Tom, your call on the market has consistently been that you think we're going to have what you describe as a three-phase market. You have great start to the year, and in all respects, we've seen that. We've hit record highs this week again on the S&P. You're going to get a drawdown. You've even used the words bear market, and then we're going to get a nice ramp into year end that you think can get us to 7,700 by the end of the year on the S&P. Explain.
Well, it has been a good start, and as you know, many people kind of follow what markets do in January because that sets the tone for the year, and we're on a positive start. Plus the first week was positive. It's a good omen. So I actually think our 7,700 is probably low. I think the S&P could maybe even do 8,000. We're not sure. But we also know that there's a few things that need to be digested. 3 years of good gains. A lot of good news is priced in. There could be a policy shock. There's been a lot more, and maybe part of it is the White House picking winners and losers in front of the midterms. And the third is that we have a new Fed that the market is going to test. And I mean, today's a taste of it, right? That we have an announcement of it, and the market's already picking winners and losers among commodities or assets or dollar. So I think those can contribute to a drawdown. Last year, it was a policy shock that took us down 20%.
Professor, how does that summation from student Lee sound?
Yeah. Tom is gutsier than I am in making short-term predictions. He has actually a fairly good record. I would like his opinion. I mean, we do see rotation. I mean, the AI phenomenon is magical. Might this be the first year in 3 years where we see the other 493 stocks outperform or not? I'm calling. I wouldn't be surprised if the S&P only did 5 to 10% this year, but the non-Mag 7, the rest did 10 to 15 or even more. It's really hard to say when that might come, and AI is still booming. But I think I would like to know his opinion. Is there more competition, more doubts about adoption, more fear that there could be a technological breakthrough that might penetrate some of the moats of these great stocks?
Do you want to answer that? Because you're pretty bullish, these names.
Yeah. Well, one, all of them are linked to the importance of AI, and as the tentacles in AI grows, they all benefit. I think a lot of the progress in AI is invisible at the moment. That's why markets are kind of questioning things like what Microsoft reported. But I think that those invisible gains then lead to productivity. But it's at the same breath, this year, I think the market is broadening because we've seen a lot of other trades work besides the Mag 7, and it's not a bad thing. I mean, that to me is not late cycle. A broadening of the market is as a mid-cycle phenomenon, right? Because basic materials are doing well, small caps are doing well, a lot of industrials and healthcare. So that's a sign of a broader market, which is the other 493.
It's a sign, I guess, Professor, of what some would describe as a run-it-hot economy. That is a run-it-hot stock market, and all those cyclical areas are the ones that would do well. Now, normally after we would get a few of the mega cap earnings reports, I would ask you, well, what did we learn about the mega cap stocks this week? But I don't think we learned anything, because I think the group shouldn't be discussed anymore as a group. And we learned whatever we did about Microsoft, and we learned something different about Meta, and thus the stocks reacted differently.
I've never seen, the Mag 7 react so differently. They usually just go together, and we think of them as a group. But continuing on what Tom said, I mean, really only 15 to 20% of firms have really even begun to use the potential of AI. And I mean, those are the ones that I think really have a great opportunity to really raise their profits. And we might see layoffs, et cetera, and so on, but that's part of cost cutting in a technological boom. And that's why I think in some way they have the potential to outperform the Mag 7 this year. When you start out at 17, 18 times earnings, you don't need much above expectations at all to really have a good move with a profit increase.
Let's talk about earnings real quick before I let you go. We start out with the shrimp cocktail. The banks started out, and then we get the meat potatoes, and we're starting to get the entrees, like the companies that really, really matter. Estimates are high. We're exceeding them to this point. What's interesting to me is the price action has not necessarily matched the reporting. Reports good, price action not so much. even among those that have done well, Meta excluded?
Yeah, the numbers played out. If you compare this quarter versus last quarter, companies that are beating are rising a lot less. Basically 0.5% now, 5-day gain versus 2% last quarter. But the ones that missed were falling 5.5% last quarter. They're falling 3%. So the market is almost taking the edge off on earnings results. But I think you did point something out that's true. I think it's the first time ever that Meta and Microsoft had a divergent move. They've almost always moved directionally on the same day, and one was down 11%, one was up 11%. Or I'm getting the numbers wrong, but
No, your point's well made.
That's like a 3 or 4 standard deviation divergence.
Professor, lastly to you, are you confident that earnings can live up to the hype? Because they really have to. It's where the growth, so to speak, in this market is going to come from. It's not really going to come from multiple expansion anymore. It has to come through earnings. What do you make of that?
Well, it certainly has to come to earnings for the Mag 7, but, I don't, the non-Mag 7 are still selling at 18, 19 forward earnings, and, I think that's extremely reasonable. Certainly, the outlook, listen, let's hope we got this government shutdown taken care of, a really good Fed pick out of the way. We have one little more speed bump to go. We need to know what SCOTUS says about tariffs. That's going to come, at the end of February, and after that, let AI do its work. I think the skies look clear for a really great year in 2026.
Tom Lee's message is not that markets will move smoothly from here. They won't. Volatility, rotation, and drawdowns are part of the process, not signs that the system is breaking. What matters is trajectory. A credible Fed, a broadening market, expanding AI adoption, and reasonable valuations form a foundation that supports continued expansion. The path may be uneven, but the destination remains intact.